Good morning and welcome to Missoula Real Estate Today. This is Denny Bedard. Missoula Real Estate Today is presented by Diane Beck of Windermere Real Estate. Diane provides complete service for your real estate transaction and brings us guests who provide useful information on industry-related topics and trends. And now, Missoula Real Estate Today on News Talk, KGVO.
We sure appreciate you being a part of Missoula Real Estate Today, presented by Diane Beck of Windermere Real Estate, who always brings us very, very interesting guests. And this weekend on the show, we have Robert Montes. Robert is an investment advisor representative with Primerica. Welcome to I guess you're a second-timer, so welcome.
This is my second time. Thanks for having me.
Very good. What is Primerica, and how does it differ from other companies in its category?
Well, Primerica is a financial services firm that really focuses on working with Main Street America and bringing financial literacy to people who oftentimes don't have, $5 million they can drop right now where advisors are fighting over their accounts. So we're really a financial services firm that's designed to bring that to Main Street America.
Okay, so I'll have you expand on that a little bit because I'm playing off your slogan.
Okay.
What makes Primerica a Main Street company for Main Street North America?
Yeah.
Did I get that right?
That's a great question. And so with Primerica, what I'd say that really separates us a lot is that when we come in, the approach that we have is very education based. And so I work with everyone from clients who maybe it's their first time investing, they're starting with $25, $50, $100 a month, all the way up to 7-8 figure clients, and really just coming in and helping people identify where they're at. The idea being that once people have all the facts, they can make the best decision for them and their family. So it's very education-based. It's one of our core values, and just helping them identify specific solutions based on where they're at. So it's solutions-based versus transaction-based. And that's kind of what we want to bring to people, is just something where instead of walking in where someone's selling them products, we can sit down, find out what their goals are, find out what's important to them, and then provide solutions and education to help them get where they want to go.
And with that Main Street North America concept, why did Primerica choose that path? Was it a feeling that there was a huge underserved market out there?
Well, there is an underserved market there, and that's a phenomenal question. If you look at the data, you see that many firms, and I wish I had it in front of me, but there's been numerous studies that show that when it comes to wealth management, lots of firms don't want to work with people who have less than $500,000 or even $1 million that they can start with right now. So what you see a lot of times is people who go out there, they'll meet with someone and maybe they get some retail investment products that are sold to them, but no one's really sitting down with them and helping them put together a total wealth management strategy. And so if you have middle Main Street American clients, what do I mean by that? I mean people who aren't super rich, but they're definitely not poor. They're in a great spot. They make a great living. They're not struggling. Maybe they've got some decent assets, but I'm thinking of a client who, another firm here in town, he went to try and talk to them. The guy's very successful, runs a great business, but he didn't have the minimum of their $250,000 to get into their wealth management program, and so they turned him away. And so that's where we as a company have said, you know what, there's a big opportunity for people who can really do better if they just had a little bit more knowledge. And again, that comes back to the idea of if people have all the facts, they can make the best decision for their family.
Your background, what led you to being a Primerica investment advisor representative?
So I was actually a Primerica client first, way back in the day.
Interesting.
Yeah, so when I was 18 years old, my next door neighbor came over to me and she gave me some graduation money when I graduated from high school, and she gave me a book called The Automatic Millionaire by David Bach. And she was in her early 50s, and she said, Robert, if I would have had this book when I was your age, I'd be retired and rich right now. And so it's always been important to me to be in a spot where money wasn't a limiting factor in my life. And so I read the book. I took all my graduation money. It was about $2,000. And I went down to my local bank and I opened up an IRA. But no one had ever showed me anything. And so I was doing everything wrong. I worked at Starbucks as a part-time job going to college. I just got to know a couple that would come in and buy their coffee. And one day on my lunch break, we started talking about investing. And long story short, my buddy Brian, who's an advisor with Primerica, he helped me get all my own stuff squared away. I was a happy client. But then just through getting to know each other, he ultimately ended up offering me a job and said, if you want, you can come work in my office. You can earn while you learn, and we'll pay for you to get licensed. And so I was better than serving coffee, I guess. And so I was 19, and this was back. So it's a funny story. I got started. It took me a while. It took me about 2 years to get my investment license, but I got my investment license. I was a kid, and this is back in 2008. So imagine a 21, 22-year-old kid in 2008, I was living in Vegas and trying to talk to people, double my age about investing when the market's at an all-time low. It was a fun time period. But yeah, so I did that for 6 years, and then I took a break from the industry, I guess you say, and went into the military. Spent 4 years in the Special Operations Community with the Ranger Regiment.
Awesome.
Deployed, did all that fun stuff. But
Awesome.
always knew I was going to come back, and been back here since the beginning of 2016, and still running strong.
That is an amazing story. I'm glad you shared that with us. This is Missoula Real Estate Today, presented by Diane Beck of Windermere Real Estate. And our guest, Robert Montes, investment advisor representative with Primerica. And Robert, since we're sponsored by Diane and Windermere, I always like to ask how you got invited to be on the show. What's the connection there?
Such a funny story, Denny. So Becky, Diane's assistant, is a great friend of mine, but it was random, honestly. When I got out of the military, I was like anyone else who was just starting a business. I was scared. I was trying to get after it, and I was reaching out to people, and Becky and I were mutual friends on Facebook, but we had never met. And so I sent her a message, and she would be posting content about the real estate industry all the time. And so I just reached out to her. I said, I see your stuff. You're always making great posts. I'm a young professional, always looking to network with other young professionals. Would you mind if I treated you to a cup of coffee and showed you what I did? Maybe we can help each other out and network. And so we did. We ended up meeting, and Becky was impressed enough with what we did. She's like, hey, this is great. And she ended up introducing me to a ton of people, and she's become one of our best friends here now. And that's how I met Diane, was through Becky, and just the way the social media bringing us together.
You're not alone there, because I asked pretty much the same question of every guest that comes in on Missoula Real Estate Today, and you cannot believe how many say, Becky and I were great friends. And we.
Oh, she's like the most personable person you've ever met. She's such a sweetheart,
great.
and we love her so much.
Yeah. Well, a lot of people, regardless of their age group, are in the dark about their finances, and there are plenty of legitimate reasons for that, of course. But where do you start if someone comes to you and says, Robert, I need some help managing my money? Yeah,
that's a great question. So where I'll typically start with people is just by going over a solid overview of how money is supposed to work, especially in the investment world. A lot of times when I'm talking to people, even if they've been investing for years, we'll go through simple questions, and questions such as, hey, do you know the difference between a stock and a bond, or a mutual fund and an exchange traded fund, or what's your investment strategy, or how much risk are you taking, what's your allocation? And even people who have substantial assets, more often than not, can't answer simple questions. And so by walking through an education process, we can identify where they're at. And what we do is we do a comprehensive financial needs analysis. We do these for free. And what it does allows us to provide people and prove to them, hey, we can put you in a better spot. And the idea being that if we can show them how to improve, then we'll earn their business on the back end. And so it just allows it to be, again, education-based, where everything is coming to light based on their goals, their needs, and then what the data shows. And then it allows me to show, this is where you're at, this is what we could do to improve it. And at that point in time, God bless capitalism. If they like the ideas, they put it into place. And if they don't, then that's fine too. But it's usually a pretty easy win for people, because where everything's in writing before they're ever making a move. They get a chance to see what we're proposing and why. And that's what allows us to identify the solutions that are going to be best for people.
And I do not want to discourage the upper end demos here, but it's important to talk about, and I'm in that category, but the high cost of waiting, nothing too astonishing about that, but the way the numbers add up can be pretty eye-opening, huh?
Yeah. Oh, absolutely. And it's, everyone I talk to people, one of the most common things I hear people say is, I wish I would have started earlier.
Oh, sure.
And of course, if and what's, right? But I think there's this misconception that if people are starting later, that it's too late for them. I see that a lot. And that's not the case. There's a lot of things in place that people can do even as they're getting closer to retirement to max out their Social Security and what they're going to get there, to make the investments that they do have work best for them, or even tools and investment vehicles they can use to maybe they're not retiring at 62 or 65. Maybe we're pushing it back to 70. But I see so many people too where there's this idea that like, oh, I have to retire and never stop and never work a day again in my life. And that's not most people. Most of even my older clients that I work with, a lot of them, they just want to dial back. They don't want to have to work. So a lot of what our strategies end up being then is, hey, maybe you're going to work 15 hours a week part-time. Going to keep you busy. You're going to have a little bit of money coming in from that. But then if we can supplement that income, through other streams. And we've got, even if it's only 10 or 15 years to build those up, that's enough time. And so it's not impossible. If you're listening today and you're like, I'm never going to retire, that's not true. There's definitely hope for anyone in America. There's just too much opportunity, and anybody can retire.
This is Missoula Real Estate Today, presented by Diane Beck of Windermere Real Estate and our guest, Robert Montes, investment advisor representative with Primerica. Pay yourself first, Robert. Another pretty obvious concept, but again, here's a method that can really add up. You probably show a lot of people that formula in your daily duties.
Absolutely, and it's so easy in our world today to just forget to pay ourselves first. Forget to take care of ourselves first, and a big part of what I talk to people is about that. Is hey, and it's never sexy. No one wants to talk about budgeting, but we'll show them simple tools, simple things they can use to track their budgets. We'll show them simple things they can do to have that emergency fund in place so that if an emergency happens, they're not having to go into debt for it. And then just helping them identify what's realistic. Because one thing when I put people's plans together, I used to be such a stickler, like, oh, let's save every dime. And then one day you'll be able to enjoy life. And as I've gotten older, I'm still relatively young, I guess. But I've just realized, hey, first of all, this is America. You should be enjoying life. You should be having a great time with it. And you don't have to build a plan that you resent, and you shouldn't. You should be building a plan that you are socking some money away appropriately for what you're trying to accomplish, but never in a spot where you look at the plan and you hate it and you feel like it's holding your life back. So that's a lot of what our plans are, is just trying to make it where it's that happy medium where people are excited about it because they can see the results, but they aren't so strapped where they feel like they can't take their wife out on a date or take their kids on a family vacation or something like that.
I may bounce around here back and forth a little bit, but just ride along with me because Primerica, it's a big umbrella. There are a lot of things under there. You have some interesting ideas about life insurance on the website when I was looking at that, and one that caught my eye was the theory of decreasing responsibility. Explain that to us a little bit.
Any life insurance agents are going to get mad at me right now because, and again, this is a philosophy, and I want to caveat everything I say is that no one solution or strategy is right for everyone. So with that said, the idea of the theory of decreasing responsibility with life insurance is based on the idea that people don't need life insurance their whole life. So most often when people are buying life insurance, they'll have some type of term policy and some type of like permanent style life insurance. Well, all Primerica says, if you think about this, when do people really need life insurance? It's when they're young. It's when they have kids in the house, they have a mortgage, they have debt, and if something happens where it's husband and wife depending on each other's income, there's not a lot of cash saved up in the earlier years, so they need that protection. But if you fast forward out to retirement age, when someone's 60, 65 years old, their kids are grown up, their debt's paid down, their mortgage has been paid, and they have tons of cash if they've been saving and investing. So they don't really need life insurance at this point because if one of the spouses passes away, it's sad, but it's not financially devastating. So our idea is, hey, let's use term life insurance. Term life insurance is the most affordable way to protect a family. You can do it, it's relatively inexpensive compared to other forms of life insurance. It's a fraction of the cost of permanent style life insurance. It allows us to get people the coverage they need when they're younger. But then what we do is we'll invest the difference. So instead of having someone spend $300 or $400 a month on a permanent style life insurance policy, we'll separate their insurance and their investments. We'll do a term policy that protects them when they need it. We'll invest the difference so that at retirement, there's no need to keep paying on insurance forever, and they're independently wealthy through the investments they've built up. So that is, in the Sparks Notes version, our idea about how life insurance should work.
Let's get back to saving money as a lifestyle. Is that a reasonable way to describe what saving money is? A lifestyle?
I mean, yeah, I think so. I think it comes down to understanding you're going to pay now or you're going to pay later. If you again, you can do whatever you want. People can do whatever they want with their money. Just understanding though that there is going to come a time where you can't work anymore, right. and at that point in time, I don't know if you want to be completely dependent. I think the average Social Security check in America today is about $1,800. And so if you feel like, hey, I could live my life off of $1,800, then great, but that's not everyone. And a lot of people feel like they need more, especially if they still have a mortgage or they haven't done all the right things. And so the lifestyle comes down to just accepting a little bit of delayed gratification to make sure that you're not in a destitute place when you get out to retirement age and you can't work, but you're able to still enjoy life later on.
The rule of 72. You might need your calculators here, folks, for this one. What is the rule of 72, and how does it work? And again, this is something I kind of explored on your Primerica website a little bit. But the rule of 72, I just thought when I looked at that header, I automatically assumed, okay, they're talking about 72-year-olds.
No. Yeah, so the rule of 72, it's known as different things, sometimes called the banker's rule. And without being able to see it, it might be a little hard to visualize, but it's something someone could Google, and it basically shows people how long it takes for their money to double. So let me see if I can give you an example without drawing it out. Let's say someone has $10,000 in the bank, and it's earning 3%. Well, the way the rule of 72 works, if you take whatever rate of return you're averaging on your money and you divide it into the number 72, the answer is how long it takes for it to double. So follow with me. 72 divided by 3 equals 24. So if you had $10,000 in the bank today and it was earning 3% and you never touched it again, it would take it 24 years for it to double one time. And it would take another 24 years to double again. Versus, I'm going to use simple numbers. Let's say someone had something that was an aggressive growth portfolio and is averaging a 12% rate of return. Well, 72 divided by 12 is 6. So now that same $10,000, if it was averaging a 12% rate of return, would double every 6 years. So after 6 years, it's worth 20. Another 6 years is worth 40, then 80, then 160, et cetera, et cetera. So the rule of 72 is just a simple concept that I'll use to show people an idea of why it's so important to make sure that your money is averaging the right rate of return. Because sometimes people think like, oh, I'd rather be safer and have I earn less, but it's safer. And sometimes that is appropriate, but there's also opportunity cost that goes along with that and say, well, yeah, if you're happy with 3%, knowing that your money's going to take 24 years to double, great, let's stick with what you got. If you want it to double a little bit faster, we probably need to look at something different.
Right.
So, yeah, just a great way to kind of bring some clarity to how that works and why it's important.
All right. I think my next question lends itself to that answer. We shall see here on Missoula Real Estate Today, presented by Diane Beck of Windermere Real Estate, and our guest, Robert Montes, investment advisor representative with Primerica. Okay, if you're counting on interest rates on your savings to help them grow, is it as simple as saying the lower the interest rate, the lower the risk, the higher the interest rate, the higher the risk?
Yes and no. It really depends. So there's going to be some type of savings vehicles that are guaranteed. So you'll see when you go to your bank, it says FDIC insured. What does that mean? That means that this savings account is insured. It cannot decrease below what you've put in. Versus if you go into the investment side where you have no guarantees, there is going to be a sliding scale of risk versus reward. Now, in a perfect world, if you're taking more risk, then you should have the potential for earning more reward. But that also gets in the ball game of, are we investing or are we gambling? Because a lot of times people think they're investing, but they're just gambling. They're just picking something they feel is going to be a hot stock, or I got a hunch, or I got a buddy who works at so-and-so.
What do you say to a client like that?
I say, hey, God bless America. It's your money. Let's do what you want to do, buddy. If that's what you want to do, it is your money. But in all seriousness,
interrupted you there.
Sorry. Yeah, no. In all seriousness, though, this comes back to the education piece of really helping people understand when they think they're investing, and they're saying, unfortunately, no, you're gambling at this point. And if that's important to them, we say, great, let's set aside some money here that isn't going to make or break you, and you can do whatever you want with that. If you want to keep buying these individual whatevers and having your gambling approach, great. But let's use your strategy over here. This is what we're going to work with and what we're going to count on. So, but again, people have different approaches, and it's one of those things that a lot of times when people are coming to me, though, it's really not that hard to get them to understand the difference, because it's just like anything else. If you're going to a professional and seeking out advice, why would you do that if you're not going to implement the advice that they're giving you? So for most people, it's pretty simple to show them the delineation there and how they can improve.
Yeah, well, and you've got a pretty good menu, too. What are some of the different investment strategies Primerica can offer Main Street, North America?
Yeah, I think if I could sum it up in one sentence, our philosophy is let's make more by losing less. So we are not the most extreme or swinging for the fence investors. We're not. We're pretty lower key on the scale of risk in the investment world, I'd say. So even our most aggressive platforms, I think in the world of investing, is pretty moderate. But there are different strategies that are going to be in place. I mean, and without getting too technical, this is one of those questions I could easily get in the weeds. But there's obviously we use mutual funds, we can use exchange traded platforms, we can use We can use managed accounts. There's a lot of what we do for our wealth management clients, which is where we're actively managing their portfolios. And then there's different styles of investing. So the easiest way to explain it, you can have, like, if we were to talk about real estate, people could go out there and they could say, hey, I'm going to buy a property, I'm going to fix it up, and I'm going to flip it, I'm going to make profit pretty quick. That's one style of investing in the real estate world that people understand. Another style would say, hey, I'm going to buy a property to hold on to. I know it's going to grow over time, but really the way I'm going to make my money is through people paying their rent on time and just managing that. It's the same thing with the investment world. There's different strategies where some are a little bit quicker, where we're doing more changes to make a quicker profit, and then we're moving to the next thing. And there's some strategies that are going to be more long-term. We're buying, we're holding. We know there might be some fluctuations in the price over time, but it's just like when you have, if you have a dividend-paying strategy, the same way as if you have renters who are paying their rent on time, you still always have money coming in. So without getting too in the weeds, it comes back again to finding what is going to be appropriate for the client. And a lot of that has to do with their personality. If I have someone who doesn't like a lot of changes, we're probably going to go with something that's more a buy and hold strategy. If I have someone who likes the idea of having things constantly monitored and tweaked, we're going to go with something that's a little bit more of what's called a technical strategy. So it really does come down to doing those plans and identifying what the people are trying to accomplish and what's going to be best for them.
Is some of that reading the room, i.e. kind of getting acquainted with this client and getting a feel for that, or is it kind of a let's fill out this questionnaire? And
it's both. And so when I meet with people, one, again, going back to our core value of education-based, and we never sell on the first appointment. Never. That's a hard rule. Don't break that, because I think that takes it away from how do you teach someone anything meaningful if you're asking them to write a check right away? It doesn't work that way. So coming back to that first process of let's find out what they want to accomplish. Like, I never look at my job as being like, hey, Denny, this is what you need to do with your money. That's not my job. My job is to say, Denny, what are your goals? What do you want to accomplish? What's important to you? And then based on what you tell me, I take that data, I can then go back, build your plan, and come back and say, Denny, based on what you told me was important to you, here's some strategies that we would recommend, and here's why. Here's what you're currently doing, and here's how these improve upon where you're at. Based on what you said, though, this is going to be the best fit for you. And so it's not so much, I don't want to say playing the room like, oh, I feel like Denny's going to be this type of, no. It's more of just like, hey, let's find out what you want to accomplish and then show you the best strategies and resources that can make that happen.
I really like that answer, because in addition to my programming duties, I also have an account list. I sell advertising.
Nice.
And a lot of what I put together for a client is that phrase, based on what you told me, here's kind of what I would recommend for you. And the other thing I like about what you said is that you're not trying to sell someone what you want to sell. You're trying to sell what they want to buy.
Yeah, and another one of our core values as an office is the word stewardship. So the idea that it's not our money. It's not my money. It's your money. So my job as your advisor, having a fiduciary responsibility to you, is to always provide what's best for you. And I think that if you do that, even if it means that the office or business doesn't make as much money, who cares? Because I think that's a limited way of thinking, like, oh, we need to get as much as we can per person. That is the wrong way of thinking. I would much rather make a little bit less money, but do what's absolutely best for the client, because my entire business referral base, 100%. So if you're going out there and you're just trying to gouge every single person you meet, and unfortunately the financial world gets that, they get that stigma that people have, like, oh, they're just trying to rip me off. And I think that couldn't be that's the worst way to do business. But if you are consistently exceeding people's expectations, I hate the saying, I'm going to under-promise and over-deliver. I don't like when people say that. I say, let's over-promise and then over-deliver on that. Again, if you do that and you're consistently providing more value, you're staying in touch, you're there for the client, and you're, in the world we live in, that's what people want. And even if you're a little bit more expensive, because I'll be straight up honest, we're not the cheapest, not by far. There's people who cost less to work with. But again, another thing I believe is cost is only an issue in the absence of value. So if I can show someone, hey, yeah, it's going to cost you a little bit more to work with me, but this is the value that we're going to bring to you, and this is how we're going to help you accomplish your goals, people don't care if it costs a little bit more, because they want solutions, not just the cheapest product.
Hey, want to say a special thanks to some of Diane Beck's marketing partners that help bring you Missoula Real Estate today. Rob Fleming with Mann Mortgage, Miles Link of Opportunity Bank of Montana, and Carol Blodgett from MakeItMissoula.com, and our guest, Robert Montes, investment advisor representative with Primerica. You could probably do half an hour on this, but I'll ask you at least some of the things you like the most about being a representative with Primerica.
Man, I love the fact that, just going back to what we were talking about, is that it's truly, our business model is based on doing what's best for the client. And so knowing that we don't move money to move money, it's awesome. I love, and it doesn't happen too often, but there's been times where I've met with people and they've got a perfect strategy. Their advisor they're working with is already doing the best thing. And I've been like, hey, sorry, man, there's nothing I could do for you. I would be lying to you if I told you to move the money. And so just knowing that I can walk into a meeting with any person being completely confident, knowing that we're only going to ask them to do business with us if we can improve their situation. We're going to make those recommendations, and that's all going to be based on the data. And it's not just me like, oh, I think you should work with me because I'm a nice guy. It's me being able to say, hey, here are the tools that we have in place that will allow us to improve your situation. And if I can't do that, great, that's fine. Well, maybe you know someone who can benefit. I like that because I've got friends of mine, who work at different financial firms. I've got a really good friend of mine, childhood friend, who works at a big firm in their compliance department. And he's constantly sending me things about there's someone got in trouble for this or someone got in trouble for that. And I kind of jokingly said, hey, why don't you tell your advisors to stop being crooks, all right? And I just like that. I know we're not perfect. I know people all have issues at every company. However, I just feel like the model is really tailored towards what's best for the client.
A success story along your Primerica career path. Anything come to mind that has really given you a lot of satisfaction?
There's been a couple things. Just probably the biggest thing that I see, and I know I've been really blessed. We have, like I was telling you before, I've got about 300 clients between Hamilton and Missoula,
right.
And been very, very fortunate. And specific cases, it's more of just bringing to light that people are actually going to be able to retire. So I'm thinking of a couple that's down in Florence. And just when we first met, they had pretty sizable investments, and they had an advisor who was a great guy, good friend, but no one was following up and just doing any reviews, and their accounts were suffering as a result. And it basically worked out to where what they were paying in fees ate away everything that they were earning on their investments. And so being able to show them that, where they still had enough time where we could make those changes, knowing that by the time they retire, they're going to have more than enough to do it the way they want to. But then not just being an investment firm, we were also able to help them with their debt elimination, because a lot of times people aren't saving enough because they have debt.
Yeah.
So being able to sit there and talk to them about what are the strategies we can use to pay that debt down, and putting together a plan that got them debt-free years sooner, saved them thousands and thousands in interest. And then just they've become great friends. I think one of the things I love most is that, this same couple, they when we moved to our new house, they sent us a housewarming gift. Mm-hmm. Or, I have so many people, my best friends today, we're all clients first. But then just because you get to know people and you become integral parts of each other's lives, I think that's the biggest reward, is that all my best friends were clients first. Like, even using Becky and her fiance as an example, we met and she was a client and all that good stuff, but then we've become great friends. Her brother, soon to be brother-in-law, has asked me to be the officiant at their wedding. Like, all this stuff that comes from just meeting people and building relationships. It's I think that's the best success stories.
Now, do you have to go down to the Texas border to do that?
No. So he actually lives. The brother-in-law lives here. He lives here in town. Yeah, going down to Texas. I always give her fiance a hard time with all the fun stuff that's always going down there. So. Yeah.
Yeah, well, we wouldn't go into that even if we had time. But
I know.
Robert Montes, great guest, awesome guest with investment advisor representative with Primerica. And Robert, before I let you go, how about a little contact information? How do people get a hold of you and or learn more about Primerica?
So probably the easiest way, I will be the person who will happily give my phone number out over the radio. So my number is 406-369-3396. Again, that's 369-3396. Easy to just contact me there. You can also reach out to me via email. You can send me an email at letswinwithmoney@protonmail.com. So, or you can just search. I do videos on a weekly basis, and you can just use the hashtag #Let'sWinWithMoney. That'll bring up some of the educational videos that I post, and an easy way to get a hold of me. So.
It has been great having you on Missoula
Real Estate. I always love doing
today.
this. It's fun.
Thanks for coming in.
Time. Yeah, thank you, Dave.
We'll do it again.
We will. I'm looking forward to it.
Thank you for listening to Missoula Real Estate Today. Contact Diane Beck with Windermere Real Estate. Email dianebeck@realtor.com or visit her website, homesinmissoula.com. We'll see you next time on Missoula Real Estate Today.